I'm gonna start doing it. Oh, am I? Yeah. Oh, I missed that one. Yeah, let's do that. Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How we doing out there? I like teasing Cody and Charlie. We got a very diverse group here in the audience. Well, in our office, I should say, which is moving, by the way. So you're going to slowly start to see this stuff come apart. It's going to look like a place under construction. But as we're taking stuff down, we have a little bit of a crisis here. We have the mystery of the half-drunken Bacardi bottle that has shown up in the back behind the stages there, and no one wants to fess up. I think it was Mama Jazz, to be honest, because I'm not a Bacardi guy. I personally like my bottles a little bigger. But, who was that? I think it was Charlie. Yeah? Bacardi? It's just a sip, too. No, that can't be Charlie, because he wouldn't have taken a sip. He would have drank the whole thing and left the bottle on the floor. All right, well, hey, welcome. That's enough of that. Just having a little fun here. We got to talk about the stock market. There's actually a lot going on because it's earnings season. There's a lot of moving pieces to the puzzle right now, and we're going to do that today. But actually, this Thursday, our class, our Wine and Wealth class, or Bacardi and Wealth class, is going to be on when exactly to rebalance, the data behind that. Not my opinion, not some YouTube guru thingy, but exactly when to rebalance 401ks, TSPs, all that great stuff. We're going to show you every single scenario, too, so that you can decide maybe even if this is the most efficient, this is all you have available to you, and that's second best. So we're going to go over that. Research members, they'll also have that available to you in the research site as well, so you can participate and help get your dough straight as well. All right, we got Jerome Powell basically just all over the TV here today testifying in front of Congress. Couple comments. He said that they need to see substantial progress before tapering. He would not give specifics. That was the big thing today. Was he going to start giving specifics about tapering? And he did not budge. And it was kind of like, David versus Goliath there with some of these congressmen and women asking questions, but wouldn't budge. So no specific advice there. He did say that it is discretionary and they are watching it, but that he would give plenty of heads up. So what that means, I don't know at the moment, but we'll see what happens. Also, we had CPI yesterday, which is the consumer inflation number that we like to look at broken into categories. Today was on the producer side. So the companies that make the stuff that the consumers buy, how was that going there? Producer prices actually had their biggest gain in over a decade, which is kind of like consumer prices there. Higher commodity costs and labor costs were the issue there. Now, there's also a survey that's done. I want to share it with you here. What the average American thinks inflation will look like over certain periods of time. So they ask them, hey, 1 year ahead, do you think inflation will be higher or lower? They said 4% higher. And then they say, okay, how about 3 years ahead? Do you think it's going to be higher or lower? Not as bad, but still higher. So that hint of that they're buying what the Fed is saying, and maybe it'll taper off a little bit there. One of the cool areas that I thought was 1 year ahead, what do you think the home price change will be? Very strong. People are optimistic that home prices will continue to rise there as far as the next year is concerned. And then you got to go with rent. Not everybody's buying a house there. Rent was the worst. The average American thinks rent prices will be up by almost 10% looking 1 year ahead. I don't disagree with that. I mean, if you look at what's happening right now, maybe that could be the case. So very interesting there. One good thing about inflation, by the way, I always try to think of every side here and just, it is what it is. So let's think about what we can do. Let's strategize. One good thing is if you are about to or currently taking Social Security, you're likely going to get a big jump in your cost of living adjustment, right? I mean, that if it's not 5 or 6%, then somebody's got some explaining to do, right? Because we all see inflation. So if Social Security says we're going to give you a 2% bump, which they won't do, but if they do something like that, we know there's something wrong. So it's looking good. I mean, good and bad, I guess. With inflation comes other things as well. So we'll see how that goes. Anyways, let's take a look at the stock market here today. You got the Nasdaq led the day today, basically thanks to the same names. I'm going to jump through it here real quick. You got Apple, the biggest contributor on the day, hitting new 52-week highs. You got Microsoft as well, hitting new 52-week highs. You got Google in there. It's the same names, right? They're all just moving higher here, same thing. Moderna was one of the bigger gainers here today in biotech, helping things out there. It was also the best performer in the Nasdaq today. If we look at the S&P 500, there we go. So S&P 500, well, really? If you can look at it like this. Apple and Microsoft, those two names account for the entire day's gains in the S&P. You can actually say that now. So if you had not bought the other well, if you bought every stock there, it'd be, if you didn't have the other 503 names and all you had were those two names, you beat the stock market today, because it was just those two names that made the markets have a slight gain on the day. You get what I'm saying. Nvidia down on the day. That was one of the drags, down 2%. Hopefully continues to pull back. Tesla a little bit weak on the day. That was one of the two. And then Facebook. So we can't say all of the same names were moving higher. We got a little weakness showing up in Facebook here and a few others like Nvidia, which is always towards the top of the list there. So S&P wise, a typical quiet kind of summer day. It is being held back due to banks' earnings. We'll cover some of that stuff in just a second. But what is pulling back is the Russell 2000. I don't come on here and tell you, like, you buy this stock, whatever. I'll tell you what we own or tell you if we own it. But if you're looking for ideas, new places to put money, you're going to want to start in the Russell 2000. If you look at the Russell 2000, it is now in last place comfortably for the year. It's the best place to look for discounts. And I'll tell you, if you're looking in the Russell, you're going to start with small cap growth stocks. Those are where you're going to want to look as far as the Russell goes. Now, remains to be seen whether we're going to really pull back or not. But so far, we were just pulling back towards the low end of the range. That was by far the worst performing index of the day. Quickly looking at the Dow here, is basically flat all day long. Apple gains were offset by United Healthcare. United Healthcare happens to report tomorrow. We'll cover that in just a second there. But flat is probably good for if you're playing Guess the Dow. If you're playing Guess the Dow, you maybe have a guess right in there. And let's see where we stand. Cody's going to tell us.
Yeah, not a lot of movement today on the unofficial Guess the Dow leaderboard. If you want to play, you can go to jazzwealth.com/Guess the Dow. We got Bea, Russell, MD, Edward, and Mr. Ernie rounding out the top five. Those are 4 of the 5 names that were on there yesterday. With the addition of Bea, we got 3 out of the 5 are clients, so that's exciting.
Well, B is a client. It's B.
Bea.
I think
Bea.
you say it B.
She'll let us know. All right, well, either way.
She'll let us know. But that's one of our clients there. That's awesome. Good to see there. I love it, man. So we got a leader there. Cool. So if you want to play along, you are welcome to play along. Go to jazzwealth.com/Guess the Dow, and you are welcome to play the game there. Now, look, earnings season. It continues to be a slight disappointment, actually, if you're looking here. We're not getting the sky-high earnings that we're looking at. Now, that's fine when we're largely focused on one sector. So you don't see this broad market movement yet because banks haven't done as well as we've expected, but they're really the only ones reporting. So if that continues, you go, all right, push them aside. Is everybody else doing okay? But if everybody else starts saying, yeah, we didn't hit those numbers like you wanted us to either, remember, we're looking for 64% growth, then you're going to see people start to beat this market up a little bit. If we look at earnings here, we made it today through Bank of America, Blackrock, Citi, Delta, PNC, and Wells Fargo. Tomorrow, we're going to continue with the banks, and now we start squeezing in other names. We'll go into next week with a lot more diversity there. So you've got Morgan Stanley, Progressive, Schwab, and United Health, which I mentioned, typically beats, has a decent response too. So we got 92% of the time it beats. They do give guidance 22% of the time. That's good. And average gap is positive. Average full day is positive with very limited volatility. Our most volatile name for the week is going to be down here. We're sticking with the financials. It'll be about a $5 range expected there. And then transports. Martin Transport is right here. They are the second most volatile for the week. As we start getting into transports, we start getting into more of the industrials and stuff next week as well. And of course, tech will start to lead the way. So there's some of the stats on that one if you wanted to take a look and see what we've got. All right, sector-wise, hey, more of a defensive type day today. If you really lightly look under the surface, and it's not, it's maybe a hint of something here. Very defensive. We'll cover that in a second. But also dividends. Right? This money moving towards dividends is starting to become just a touch more obvious here on the charts, and I'll try to show what I can here. First of all, financials, weak on the day. We're not getting the blowout earnings that we expected. I'll cover those in a minute. We got misses. We're not expecting to see this, right? People were expecting to at least match or beat earnings. It's not happening so far with the financials. Energy pulling back on the day. 2 stories, really. First story is energy oil stockpiles here in the U.S. Actually falling, which you think, wouldn't that make prices go up, right? We have less supply. What's the other part to that equation? Demand. Demand is falling too. Supply is falling and demand is falling. Well, that doesn't sound like an economy that's recovering there, so a little bit of a question mark there. Also, you had OPEC OPEC countries come to an agreement. The UAE comes to an agreement or a compromise where they can produce more oil. It is not an agreement. It is a compromise in like a handshake sort of thing, but they have not put together a deal just yet. And so that's what you have there. With energy, you're going to notice some of the stocks on your, if you're searching through like the S&P, you're going to notice that like Occidental Petroleum, weak day, FANG is a weak day. These are still your leaders for the entire year. So although they're having kind of some weak days here, take a look. We go through, that's my wrong list there. Yeah, you're going to find Occidental Petroleum, Devon, Diamondback Energy, which is FANG. That was my pick for the year there. These are all still your best performers for the year. So having a little pullback, not too big of a deal there. I don't think many people mind. Your leaders are going to be interest rate sensitive stuff. Real estate and utilities. Real estate almost hitting new highs. Utilities trying to come out of a downtrend there. That is on the quick reversal in rates. If you're looking at short-term rates, they all have started just completely reversed yesterday's action and headed back lower again. So that is that. And then that defensive area I wanted to show you, consumer staples. This is a lagging sector here this year so far, really. Consumer staples starting to wake up. And if you look inside of it, you got Coca-Cola about to hit new highs, trying to get in on some of Pepsi's fun from yesterday. Pepsi breaking out on the they had earnings come out. And by the way, Coca-Cola is changing the flavor of Coke Zero. They're actually going to try to make it taste more like Coke. They did this when I was a kid. I saw the commercial when I was a little kid. I remember seeing commercials when they did this in the past, and I don't think it went well. I wasn't old enough to know, but I believe there was some controversy around that if you're a Coke Zero or a Coca-Cola type person. But hey, nonetheless, you got consumer staples. What are these stocks? These are your dividend-paying stocks. When you look inside of consumer staples, those with the highest yield are getting the most returns in the short term. What's everybody doing there, huh? Everybody going for a yield. Not only to mention that, utilities and REITs, right? You got utilities and REITs, the two highest areas in terms of overall yield per sector. So money going there. Rates, yeah, they fell a little bit today, but right, we're still within a low range. So money getting more defensive, money getting more focused on yield there, which is good if you have that sort of, if you're playing in that category there. All right, let's talk about earnings. Bank of America's first up. They missed. 2.5% there. Revenues missed. Trading revenues missed. Fee revenues on their assets that they manage, they missed. Net income missed. Profitability missed. Just wasn't good for Bank of America there. Stock moving lower as it probably should based on what they reported there. Now, Blackrock, same thing. Blackrock, it was kind of mixed earnings-wise. They beat on earnings there as overall. Had a net draw, or how do we say it? Inflow and outflow. So they had a net outflow of money from their institutional funds. Those are those ETFs that you talk about where you look at BlackRock, sort of specialty ETFs that more wealth managers and people might use. Outflows, money moving elsewhere from their fixed income and equity funds were the weakest areas for BlackRock. And so not good news for them. You got a little bit of a move lower. Assets under management actually went up 0.5%. So they saw some strength elsewhere. I didn't look that deep into it. I'm not sure how that came about. Citigroup down a little bit on the day as well. Citigroup beats on earnings. Revenues were just as expected. Again, it wasn't a blowout report, right? Goldman Sachs blew it out of the water with earnings. Some weakness elsewhere, but we're not having the blowouts here, so that's a bit of an issue there. We'll go, let's go alphabetical. Looks like that's what I did today. Delta Airlines breaking below the 200-day moving average. They make their first profit since COVID started. That's the headline there for them. What's kind of under the surface there is that, how do you say it? Losses less than expected. Still showing losses. Not very good there. So Delta's got a little bit of work to do there. They were positive going forward. And I might just throw one other thing in there. They own 1/4 of Up, Wheels Up. So Wheels Up went public today. The sort of private, what is it? You pay by the hour flight thingy. I don't know because I wouldn't do that personally. But you have them going public. Delta owns 1/4, and their launch was actually quite positive. So you go from like 960 something, 930 something, closes at 1155. You would argue that's a pretty successful day for them. Moving on, PNC Bank. PNC was a big miss actually. I tried to look through this for you guys. Didn't have enough time. So it was a miss, but it wasn't. PNC Bank down about 0.5%, and I think that was largely because of confusion here. Maybe I'm not smart enough to understand this, but analysts shot really high because PNC bought BBVA. Well, PNC's earnings report had the deposits and had the loans from BBVA, but it didn't have the costs. So we're missing a piece of it. And so because of that, they kind of missed, which means if they added that, they would have missed by more. So what? That's like fancy financial accounting there on their part. I'm not sure what happened there. It's one of those fun things I'll look at later, but that's what you have. Wells Fargo, actually not too bad. Beat by 47 cents. Revenue's better than expected. That was a bright spot. So in financials, you got one bright spot, but that's not good. Infi, which Infosys is the company, we always say Infi. It's a tech company out of Israel. Hits new highs here today. Revenues missed. Higher labor costs were an issue, but super positive going forward for them. Moving on, stocks in the news. We're going to have a lot of stocks to report next week with earnings, so just hang on. We're probably going to expand on this a little bit. AMC, the old meme stock here, the granddaddy. Down 15%. Remember last week I showed you that searches for AMC, meme stocks, right? Those types of things, searches are down, right? So people are becoming less and less interested. Well, today we have quite a sizable drop here. I thought it was unfair that CNBC said shares tumble as reality sets in for investors. You guys hyped it. CNBC hyped AMC and GameStop and stuff. Now they're turning the story around and saying, oh, you guys, oh, man, lesson learned by you guys. I don't think that's very fair. AMC down because of that and largely the lack of volume and interest. Twitter, have you been using Twitter fleets? Cody, Twitter fleets? No, right? Okay. Cody's not a Twitter fleets guy, and I don't think a lot of people were because they got rid of it. You know why? Nobody wants to show their damn face. They want to go on there and rile up everybody and use all these words that you wouldn't use in public, but they don't want people to see their face. They just want to see the screen name. That's my belief. What do you think?
That's all fake accounts and hiding behind.
Yeah. Yep. You don't have that on Instagram because ain't nobody, hey, people are just doing good stuff, right? Cody's metaphor for life. Just run the football, man. Every day I come in here and I look at Cody and I'm like, we should do this. And he's like, just run the football, man. Just do what's got you here. That's crazy. Well, anyways, that's the news on Twitter. So if you're looking, it really didn't affect it much today. It was up about 1%. Didn't bring the eyeballs that they were hoping it would. Peloton, so downgraded by Wedbush. They said more competition is coming their way, and they ain't lying. There's a lot of competition out there for Peloton, and I noticed on social media more people asking the question about which ones should they buy, which brands. It's not just about, hey, I'm getting a Peloton. Anybody want to review it? Now it's, hey, I'm getting a Peloton, or I'm thinking about getting a Nordic Track, or many of the other brands as well, even some of the Under Armour brands that are not bikes per se. So a lot more competition there. Okay. Yeah. Stock was lower. Norwegian Cruise Lines down 3.5%. They are suing Florida's Attorney General, which is part of the reason for the decline here today, but they basically all had a rough day. Suing the Florida Attorney General because we put a ban, and we're in Florida, so we put a ban on cruise ships requiring a vaccine passport. Norwegian Cruise Line says we want everybody to be vaccinated, and I thought the comment was great from our state. Florida said, apparently Norwegian Cruise Line prefers the shackles of the CDC to the freedom offered here in Florida. That was good. That was a good comeback there. But that fight is not over yet. Now, I bring it up because this is a very sensitive area right now. We are all expecting people to get back out there and cruise. We are expecting these guys to make profits. If there are little hiccups like what happened in Italy the other day, now we have a recipe for more weakness. Nobody wants that. We want to see everybody do well, and we want to see these guys start to recover. That's why you're seeing the pressure, because we're not full on go back out there and cruise and everything's going to be fine. You send a Disney ship out there, a couple people test positive, they bring it back. Right? So we can't have things like that if you want the cruise lines to officially turn the corner and start giving some of the goods up there. So that's why I bring that up. I'm going to be following a lot of the news on that, whether it's whatever it is, because it's going to affect them. It's going to create a lot of volatility. Apple says that they're telling their suppliers, up production, man, get going. We got a new iPhone there. We need 20% more. What can you do to give us more of that? And they're likely, I guess, going to be expensive because they're working with Goldman Sachs to work on payment plans for their new phones there. So never thought I'd see a day that would happen there. So we'll let the stream catch up here for a second. Let's go outside the market for a second, shall we? Cody, you up for going outside the market?
Yeah, let's do
Go
it.
outside the market a little bit. So, do you know Milando?
Not personally.
Also
no.
known as Tiger King?
Oh, okay.
Tiger
yeah.
King in the news. He gets the appeals court to overturn his sentencing. They found a technicality, so now he's going to group his 2 murder for hire convictions together. He may not have to serve as much time as he thought.
He's been fighting that
He won't give up.
since he got famous. At least.
Yeah, he won't give up. I give him that, man. I watch the series and all that, and I forget a lot of what happened. But hey, that was in the news. I thought that was interesting. Government news: $3.5 trillion spending plan is on track. We said yesterday they were looking at 3 to 4 trillion. They mentioned in the middle, 3.5 trillion there. The nonsense out of that is they said it's fully paid for. And since we're talking money, I get to talk about it. Fully paid for. When's the last time the government, spent money and it was actually fully paid for? So it's going to be fully paid for by tax reform, taxing the rich or anybody that makes $400,000, economic growth, which is a question mark because, well, do we have that already? And health savings. When was the last time the government saved money on health costs? So it's $3.5 trillion that is working its way. Not official yet. But no way it's officially paid for, I would say. Not even close. And got a lot of questions on the old cannabis thing. Chuck Schumer did propose it. And whether you agree or disagree, it's something going on there. What I disagree with is the money from the tax that they generate. You think like it's like, hey, fund some of this stuff. $3.5 trillion. Let people do what they want to do. And maybe you go fund some of the garbage that you want to spend money on. No. Mm-mm. He says it's going to go into an opportunity fund. Don't you worry. It's going to go into an opportunity fund, and we're actually going to spend that money in communities that were hurt by the war on drugs. Anybody trust that that's actually going to happen? I have a little problem with that. I don't think the money's going to go there. And what about Social Security, huh? Shouldn't we maybe talk about that? Just my thoughts. If you're going to spend the money, you got to spend it somewhere that makes sense there. But we'll see what happens. Tell the Democrats to stop flying private. Who? Me? All right, I'll call them up. What other questions do we have here? Yeah, that's right. I remember seeing that. Cosby got out. Yeah, I remember I guess we all got older, but that's crazy. Caleb wants to know what's going on with Alice Walton. She's still selling. I'll put together a graph there, and we'll catch you up from the last time there. Still selling. He's in jail now, so he's getting at least some of it. But I don't know if it turns out that he, doesn't stay as long in jail. I think that's what he's fighting for. But apparently they did murder for hire, which got 9 years, I believe, for each one. They did them separately, and the law is that you have to put them together. So I don't know if that means less time or just another shot. It beats me. They'll make a movie out of it, I'm sure we'll see. Hey, the moving to yield is very interesting. Love to see a deeper dive. Okay. That can work. Now that's just starting. That's one of those things where you kind of go, that's not normal. Something's going on there. If that continues to carry forward, then you go, why? Where? Where's the money going? Like, is it broad? Is it going everywhere? Is it going to value stocks? Where's it going? So it's something we can't expand on. Yep. Thoughts on Solar Edge? Yeah, solar in general. Obviously, severe pullbacks there. Had amazing runs last year, so we owned it. It's, obviously doing really well. Brutal day across the board on those. I think solar in general, you look at the current administration, love them or hate them, that's what they're focused on. Clean energy, renewable energy, all that great stuff that they want to try to push, and apparently are spending a lot of money on. You have to imagine these guys being the beneficiaries of it. I just think right now, okay, we're talking proposals, all this taxing and stuff. It's just fear talk. That's why I don't do videos on it and stuff, because it's just, hey, this is what may happen, but we don't know. I think they would do well with actual spending. I think they'd be a clear beneficiary of that. Yep. One second. Thoughts on Caterpillar? Oh, you guys, Giovanni. I see what you're doing. That's your game. He's got a game. 215 by July 30th. There would be no reason that it could not move that far. That's not very far for Caterpillar. I worry about the market in general. I worry about the look at the Dow was flat today. So there's no reason it can't move that much. It's not asking it to move that much. That would basically just reverse one little day. So if I owned those calls, and I had been owning those calls, I wouldn't do anything. I would hang on to them. I would think there's still plenty of opportunity. How long until we get a good pullback there? I would love to see that, actually. You're starting to see, like we mentioned today, Facebook, now we're down to just Apple, a little bit of Google, and Microsoft sitting at highs. Look at Apple. It's super extended here, right? So not saying that Apple falls apart, but any normal pullback that gets people excited to want to buy, just like this, right? Anything like this, all of a sudden you have one stock there holding it up. You can't do it with just one. The math doesn't work in the favor there. So we're basically fighting on empty at the moment if you're looking at the S&P. That's how I feel. Yep. Fight against the opportunity fund. How about they decrease tax rates, partially subsidizing them with it? Well, that's an idea. Yeah. I think there's, Flower, I think there's a billion better ideas than that, right? To how you would say, oh, we'll just take the tax and, oh, we'll hang on to it. We're going to put it in this fund over here. And just kind of feel like that fund would end up with less money than it started with somehow. I just feel like it. And then where's the specifics there? Like, how do we decide where it goes? And what specifically are we going to do to make sure that we are helping these areas and stuff? That's a tough one. That's a tough one. Hey, what's a good sector to look into for infrastructure bill that passed and the additional funds from that Senate? You're usually looking at materials and industrials, usually, for that. Now, in this case, well, let's just say, aside from this one, you look back and go, oh, anytime there's been major infrastructure passed, it would have been Dow-related stocks, as that used to be more industrial. So industrials and materials is where you would normally look. Materials would be the chemicals and all the things that help make those materials. This time, you have to include renewable. I think, whether you agree or disagree, you have to include them. You can see the money's going to be spent there. So that's one I think you got to include as well. Yeah. Uh-huh. I love it. What are the top 10 growth ETFs? I don't know off the top of my head. I'm actually working on, so for people that have to buy mutual funds, everybody says Vanguard. I'm a T. Rowe Price fan. But I don't want it to be just because I am. I want to actually show that performance difference between all the different mutual funds. So I'm working on that to make it just a public video, because T. Rowe Price beats Vanguard hands down. Comparing funds, even though they're slightly more expensive, still beats it hands down. Volatility's less, but everybody just thinks Vanguard. So personally, I would be a T. Rowe Price guy. We don't buy mutual funds here in our funds that we have, but for people that have to make those decisions, yeah, that's where you got to look. Mm-hmm. The best city for a young family to live in Florida, please. You're asking the wrong person, because if it were me, I would say Kissimmee, all around Orlando, not towards the city of Orlando, but more around Kissimmee, and just because of Disney World. So that'd be a bad one for me. It's not cheap, but that would be what I would pick. All right, I'll wrap it up there. Did I get you fired up here today? We got a little bit of everything in there. Politics starting to touch your dollars there, so naturally I'm going to have an opinion just because it's money moving left or right or whatever they're deciding to do. But that's the fun part about it. We can still be friends. We can still come together and talk about this stuff. We will. We'll be doing this again tomorrow, so I hope you'll join us. Thanks for coming by here today. And let's see what tomorrow has in store. More earnings. It'll be the most earnings we've seen so far for this short earnings season. Enjoy the rest of your day, and we'll be back tomorrow.